So good afternoon everyone, my name is Maurya Hanspal and in this session we will continue our previous session on portfolio analysis. In the previous session we calculated how to know about the measures of association. That was your covariance and correlation, and we try to understand why covariance and correlation as a measures of association are so important. And then we try to differentiate between the two, that what exactly do we mean by covariance and what is correlation. So when we talked about the covariance just shows you the direction and not the magnitude. And the range, it ranges from like the minus infinity to positive infinity. And when we talked about covariance, it shows both the direction as well as the magnitude. But the range, it ranges just from -1 to +1. So all these things we try to understand and we try to calculate it manually on the whiteboard. So then now we are calculating on the Excel as well. So to be very frank, on the whiteboard, the calculations can be very cumbersome and we can just use just 2 data points or 2 returns of the stocks, that's it. You can also use the 3 returns or 4 returns, but that can take a lot of time on the whiteboard or when we are doing it with the pen and paper. So on Excel, you can do it in a quick go, beat hundreds of stocks. Okay. So for that, you have a function called covar. For covariance, you have a function called covar. अब इसमें भी S लो, P लो या सिर्फ covar लो, ज़्यादा फर्क नहीं पड़ने वाला. Our array 1 is the holding period return of Tata Motors. Okay, so what is the array 2? It was the holding period return of Wipro. Right? Close kara. And this is the covariance that we got. Similarly, we can find the correlation as well. Right? For correlation, just right here. Yeah. For correlation, you have a function called correl. Again, it says array 1 and array 2. Going back to the top, holding period return of Tata Motors, comma. यहाँ पे तुम control shift and up key कर सकते हो because already you have come down. It doesn't make a difference. This is a correlation and it is positively correlated. So see, this is the covariance which is 0.00018. So we can assume here what? We can assume here that both these stocks of Tata Motors and Wipro are positively correlated, have a positive covariance, but the covariance is not so high because it is like 0.0018. Okay, but still they're positively related, though with a very small amount. Now you have the correlation, it is 0.26916. Though it is 0.26916, 1 की तरफ नहीं है ज़्यादा, because like it is toward like 0 towards, like it is more towards 0. So we can say though the covariance is positive and they move in the same direction, but the correlation is not very high. Okay, तो मतलब कि सेम डायरेक्शन में वो मूव करते हैं, एग्रीड, सेम डायरेक्शन में वो मूव करते होंगे, बट बहुत ज्यादा से नहीं करते. Okay, so that one thing you need to understand for this. Okay, so that is one thing which you need to know about. Yeah, but so this is how we calculate the covariance and correlation on Excel. Now our task is to calculate one thing. How to calculate the beta of the stock. And we already know that what exactly is beta. We talked about it in the previous session where we tried to understand the systematic risk and the unsystematic risk. Non-systematic risk was the risk which was the diversifiable risk. The risk that can be diversified away by creating a portfolio. Right? It was the company specific risk or the relevant risk or unique risk or idiosyncratic risk. The risk, it can be diversified away by creating a portfolio. The other one was the systematic risk and the non-diversifiable risk. The risk that cannot be diversified away either by creating a portfolio also. Because those are some market risks. For example, some interest rate fluctuations as done by Fed in the present day scenario. The Russia-Ukraine crisis. Right, your COVID-19 pandemic, any other drought, cyclone or flood which can affect the companies or industries' businesses. So these are the market risks. So the denotion of the non-systematic risk or diversifiable risk was the variance. Whereas for the market risk, it was beta. So how do we calculate this beta? Which is denoted by obviously B. So it is nothing but the covariance of the returns of your stock and the market divided by the variance of the market. Covariance, we know that how to calculate. We also know that how to calculate the variance. A question आता है कि market क्या है? Market can be your index, any index in India, Nifty और Sensex. अगर बैंकिंग स्टॉक्स हैं तो बैंक निफ्टी यूज करोगे ऑब्वियसली, राइट? अगर सिर्फ एफएमसीजी स्टॉक्स हैं देन एफएमसीजी इंडेक्स यूज करोगे, बट आइडियली पीपल यूज निफ्टी और सेंसेक्स बिकॉज दीज आर द बेंचमार्क्स. तो जैसे भी डाउनलोडेड द डेटा फॉर द प्राइसेस एज वेल, योर निफ्टी एंड सेंसेक्स डेटा कैन ऑल्सो बी डाउनलोडेड कि लाइक इनकी वैल्यूज कितनी थी. इफ यू गो टू द बॉम्बे स्टॉक एक्सचेंज वेबसाइट वंस अगेन, BSC. See here we can have all these data. In markets, indices data is also there. Historical indices data, you can also get it. Historical stock prices data, like the thing that we did in the past also. All data is there. Bulk deal, block deal, settlement calendars. All these things are something that not a part of this session, but you should know about. See historical stock prices as we did in the equity and all. So this data can be like founded out by you. So it won't create a problem. Okay. Equity hai, debt and others hai, even the mutual funds and ETFs people can calculate from here. Like when you talk about the stock prices. So जब हम equity पे गए, a large number of options are there. All this data, like you can choose the data of like whatever kind of security that you want. Even the same thing you people can do for the market indexes as well. You can find out the historical indices data from here. Okay, you have the equity, market capitalization, all these things. Even for indices, you have this. For what index you want to calculate. You can see indices like historical data is also there. It says you basically to select any of the index. So if I select, see so many indexes, all kinds of indexes are there. Private bank, quality bank, dollar, auto cap, small cap, large cap, Sensex, mid cap, large mid cap, bankers, Bharat. Right? All these indexes are there. अब बॉम्बे स्टॉक एक्सचेंज की वेबसाइट है तो इसमें सेंसेक्स से रिलेटेड सारे इंडेक्स आएंगे. नेशनल स्टॉक एक्सचेंज की वेबसाइट पर जाओगे तो निफ्टी से रिलेटेड आएगा इंडेक्स. पीरियड वी कैन टेक फ्रॉम सेम डेटा जो मैं पहले लिया था. अप्रैल ले लेते हैं, 2020 में चलते हैं, अप्रैल में चलते हैं, 1 अप्रैल to 7th March. Submit. Have this data. Again, this data can be downloaded. Now we are concerned about close. Okay. तो ये हम कॉलम्स को हटा देते हैं जो एक्स्ट्रा है. ओके, ये हो गया. इनको हम कंट्रोल शिफ्ट डाउन की कर सॉर्ट कर देते हैं. फ्रॉम डेट से करना, क्लोज से करोगे तो गलत हो जाएगा. या these values we need to take control C, going back to our previous Excel sheet, portfolio 1. This data is the HPR of Sensex. Similarly, the whole price of Sensex. Similarly, the HPR can also be calculated for this. Final value, initial value, same way. Now, the thing comes, either you can do one thing. It says to calculate the covariance, beta. So the formula for beta we learned, the covariance of this and this of your security and the market divided by the variance of the market. So एक ही सिक्योरिटी इसमें हम ले सकते हैं. इस फाइल को हम क्लोज कर देते हैं ताकि हम कंफ्यूज ना हो. Now what we can do is equal to वही कोबार फंक्शन यूज करके लेट्स टेक लाइक विप्रो ओनली. ठीक है, टाटा मोटर्स को भी छोड़ो, विप्रो को लेते हैं. एरे 1 विप्रो का रिटर्न, कॉमा सेंसेक्स का रिटर्न. ये हो गया. अब वेरिएंस ऑफ मार्केट निकालना है बिकॉज वो डिनोमिनेटर में बार फंक्शन यूज करा. अब to calculate beta you have to divide. This was your numerator with your denominator, like 0.71556. This is how you calculate the beta, the systematic risk. Okay, the explainable risk, the risk explainable by the market. This is a systematic risk basically. Okay. Ab, a shorter version is there. Instead of calculating covariance first, then calculating the variance of the market, a shorter way. You have an inbuilt function on Excel of slope. Just have to select the areas in that, nothing else. Slope is the beta only. Because when we talk about regression, those who have understanding about the regression, they know the slope is beta. Same answer you got, almost. Okay, so instead of calculating the covariance first and then calculating the variance first, a better way is to calculate for beta. Okay, so by beta we can calculate the systematic risk. Okay, so that is one thing. Now you want to calculate, there is one thing in the market that we calculate which is called the excess return over the benchmark. Excess return over the benchmark, which is an intercept. Okay, excess return over the benchmark. For example, if your benchmark is the government securities which give you a risk-free rate of return, safe है, so that's why we call them as a risk-free rate of return. मार्केट में इन्वेस्ट करा है इसके ऊपर, अगर आपने मान लो सेंसेक्स में पैसा लगाया है या निफ्टी में पैसा लगाया है, so it means you are investing into the market to get a higher return over the risk-free rate. ये तो आप गवर्नमेंट सिक्योरिटीज में डाल देते हैं, and the government securities give you the least amount of return because they are the secure one. And the basic principle of finance, higher the risk, higher is the expected return and vice versa. That is, lower the risk, lower is the expected return. ठीक है, तो अगर हम मार्केट में कर रहे हैं इन्वेस्ट, लाइक विच इज द रिटर्न ऑन मार्केट, सो रिस्क फ्री रेट के ऊपर एक्सेस रिटर्न कितना मिला है, दैट इज द RM. तो इसका जब हम डिफरेंस निकालेंगे, मार्केट में तो हमने मतलब रिस्क भी लिया है, तो ऑब्वियसली लाइक विल गेट सम मोर रिटर्न ओवर द RF, राइट. ये नेगेटिव भी हो सकता है अगर मार्केट ही क्रैश करता है, लाइक इन द कोविड-19 पैंडेमिक के टाइम जो स्टार्टिंग में हुआ था इन द अर्ली डेज ऑफ 2022 मार्च अप्रैल में. ठीक है, but ideally we tend to take it as positive because for a more risk we are assuming a higher amount of return. So the difference is the intercept. ठीक है, अब similarly हो सकता है कि market people who invest in the market, that is either in Sensex or Nifty, those are called the passive funds or index funds, which will give you a return as per the market. If the market has risen by 15% over the past year, your mutual fund or passive portfolio or index portfolio will also give you a return of 15%. As per now, we are excluding the concept of expense ratios. Okay. Now, some people invest into active funds, and the main goal of the active funds is to give you a higher return as compared to your benchmark. That is, your benchmark is Nifty or Sensex. अब हो सकता है किसी ने किसी पोर्टफोलियो में डाला हो, like which is active. So I'm saying we can instead call it as RM तो है ही, portfolio active return, PAR. Okay, so ultimately जो difference ये है, and that is your exit return intercept. But again, this can be like negative also, because over the time, around 48 to 50% of the portfolios of the passive funds have outperformed the active funds. And the managers were not able to generate alpha. We call it as alpha. Alpha. Alpha generate ही नहीं कर पा रहे थे. You might have heard about this term alpha. And when you are talking about the mutual funds of the portfolio, people say portfolio alpha generate कर पा रहा है. ठीक है, that is the exit return over the benchmark. A benchmark can be anything. और इफ यू आर टेकिंग एज रिस्क फ्री रेट ऑफ रिटर्न के ऊपर तुम मतलब तो मार्केट में इन्वेस्ट कर रहे हो, इन दैट केस अ बेंचमार्क कैन बी दोस गवर्नमेंट सिक्योरिटीज व्हिच गिव यू अ रिस्क फ्री रेट ऑफ इंटरेस्ट. अगर एक्टिव पोर्टफोलियो है, योर बेंचमार्क कैन बी योर पैसिव पोर्टफोलियो. नाउ सेंसेक्स एंड निफ्टी इंडेक्सेस हैं, बट देयर आर सम मोर कस्टमाइज्ड इंडेक्स. सेंसेक्स it includes the top 30 market capitalized companies. The Nifty includes the top 50 market capitalized companies. Now people have framed Sensex 50, Sensex 200, Sensex 200. You have the VIX indicator, you have the Momentum 30 stocks. So all these kinds of benchmarks can also be taken for different kinds of portfolios. So it's not always mandatory that always the Sensex or the Nifty will be taken. The modified version of Sensex and Nifty can also be taken as the benchmark. Sensex 30 and Nifty 50 हमको पता है, but there are more some modified versions. You have the Sensex 200, you have the Sensex volatile index. You have the Sensex 30 momentum stocks, Nifty small cap, Nifty large cap. Okay, so these things can also be there. Okay, how to calculate it on Excel? In Excel, we use a function called intercept. Inbuilt function Excel का, जिन लोगों को रिग्रेशन का आइडिया है, दे नो इंटरसेप्ट क्या होता है. कि जब रिग्रेशन इक्वेशन की वैल्यू चेंज हो, व्हेन एनी वेरिएबल में कोई चेंज नहीं हो रहा, या दैट वेरिएबल इज जीरो, दैट इज द इंटरसेप्ट. नो वन वाई. ठीक है, अब बेंचमार्क हमारा मार्केट है, एंड स्टॉक हम कोई भी ले सकते हैं, विप्रो या टाटा मोटर्स. लोग, द बिगेस्ट मिस्टेक विच पीपल डू ऑन एक्सेल व्हाइल कैलकुलेटिंग द इंटरसेप्ट, they take two stocks. Like for example, in this case, I can take Tata Motors and Wipro. Tata Motors and Wipro, उनमें से कोई benchmark नहीं है, कोई index नहीं है. Tata Motors को I can compare with Nifty Automobiles. Wipro को I can compare with Nifty IT. But Tata Motors and Wipro are completely अलग और separate. You cannot compare these. So कोई भी इनमें से हम एक stock ले लेते हैं and we'll take the benchmark as Sensex or Nifty. Okay. So Wipro का holding period return एंड सेंसेक्स का कंट्रोल शिफ्ट अप की, इंटरसेप्ट आगे मतलब इतना रिटर्न एक्सेस दिया है ओवर सेंसेक्स जबकि विप्रो ने. So even do it, so like you'll get a percentage return. Okay, that is something that you should know. But ideally, I believe that taking Nifty is more beneficial because Sensex की value is very high, whereas Nifty की value is still close to the prices of Wipro because वो thousands में चलता है, Sensex 10,000s में चलता है. The difference ज़्यादा है because Nifty is 18,000, 17, 16, 15, Sensex 50, 60. तो difference ज़्यादा है. That's why people tend to take like Nifty also because Nifty includes like more companies as compared to Sensex. Now you have something called as R squared, RSQ. It is an explainable risk, the risk which is explained by the market index. Control shift R squared होता है. It's called the coefficient of determination. In statistics, we call it as the coefficient of determination. लिख देता हूँ. R squared. स्टैटिस्टिक्स में मतलब कि फॉर्मूला होता है बड़ा सा, उसकी नीड नहीं है. एंड दिस इज अ एक्सप्लेनेबल रिस्क आल्सो. एक्सप्लेनेबल रिस्क and explainable risk by the market index means itna amount of risk is explained by Sensex in this case. Okay, this is one thing. So this is the risk explainable by the market. Now, if we want to know the risk not explainable by the market index, and this is also the systematic risk. Okay. Now we want to know the unsystematic risk basically. Unsystematic risk हमें निकालना है, हमारा systematic risk भी है, हमें अगर unsystematic risk निकालना है. Just not explainable. Simple. Okay. Non-explainable by market. Okay. So that is one thing. So here we understood the concept, like most important concept, like which are talked about in the market, about your riskiness of the stock, standard deviation, average returns, and ये सब चीजें. Yeah. This is basically the thing that must be known to you. So अब एक short सा concept पढ़ते हैं. Let's talk about the investment policy statement. Okay, and what is an investment policy? So basically, when we talk about investment policy, it is something that before investing into the stocks of the company, like if you are investing into the equity market or going for bond market or any of the market, you must know what your risk appetite is. We have done a lot of sessions talking about the risk appetite, categorizing the investors on the basis of the risk-taking investor, risk-tolerant investor, who's also called an aggressive investor, a risk-intolerant investor, who's also called a risk-averse investor, a risk-neutral investor also, which is a moderate investor. So once you need to know that which category of investors you fall into, and on the basis of that, you have to take your risk in the market. Okay, you have to see your financial circumstances, you have to see your goals. So by taking into consideration all these things, you have to do it. Okay. Now, an investment policy is a policy statement that assists the portfolio manager in managing an investor's portfolio in accordance with the investment goals, constraints, and objectives. You have to tell your investment manager, your portfolio manager, what exactly is your goal, what constrains you from fulfilling your goal, and what are your basic objectives. Child marriage है, मतलब बच्चे की मैरिज है, तुम्हारे एजुकेशन के लिए है, you're going for some travel tourism or for the purpose of retirement, or the necessity for the policy statement arises out of the need to manage the portfolio in a disciplined manner so that at the end of the investment horizon, the returns of the portfolio matches the investor's expectations. Because ultimately, if you are investing into a portfolio, you would always want that the returns that you are expecting at the end of that particular period, they match with your expectations basically. Okay, so further, an investment policy acts as a standard by which the performance of a portfolio manager can be compared. एक स्टैंडर्ड दे देते हैं कि इतना हमको मिनिमम रिटर्न चाहिए, ये हमारे गोल्स हैं, ये हमारे कॉन्स्ट्रेंट्स हैं, ये हमारे ऑब्जेक्टिव्स हैं. For the basis of that, we want a sufficient return. An investment policy statement, it seeks to answer the following questions. जो investor policy statement है, it seeks to answer the following questions. First, it says, what will happen to an investor in case of adverse financial situations? What will be the investor's reaction to such adverse outcomes? How aware is the investor about investments and markets? Will there be any legal restrictions affecting the investor's investment? So all these things have to be taken into consideration. Okay, so that you have to look into while framing your investment policy. Now, okay. Now, the absence of policy statement may result in a poor performance of a portfolio and may not meet investors' expectations. This lead to investors' dissatisfaction, because ultimately, if the investor is not specifying that what exactly he wants and what are his risk appetite, his goals, objectives, and constraints, the portfolio manager will not be able to suggest him a good portfolio and his returns might be compromised in that scenario. So policy statement acts as a tool in helping the individual investors to realize their real goals, to understand the constraints and risks in investing. It also helps preventing investors from making inappropriate investment decisions, because ultimately all these things have to be told by you to your manager. Like for example, you can be a person who wants to take more risk, a young person with a lesser amount of responsibilities. Then you might say a portfolio manager that you want to invest a large chunk of money into the equity. On the other hand, you might be a person who thinks that investing into a bond can be a good scenario because you are a risk-averse investor and you have a large number of responsibilities. So you invest into the fixed income instruments. On the other hand, you can be a person who combines both the capital appreciation and growth with the fixed income and the capital preservation. In that case, you are a moderate investor in that scenario. Okay. So now with the help of a defined policy statement, the investor can realize his real investment needs and goals, and also take due care of the level of the risk tolerance. Now, regular monitoring on how consistent the portfolio manager is managing his funds can also be done with the help of the policy statement. You can get to know, you can gauge the performance of a portfolio manager, then how well is he working. Apart from providing a means to realize the investor's real investment needs, the investment policy will also act as a parameter in judging the performance of a portfolio manager. Now, the policy statement should include a benchmark portfolio. Okay, you should have a benchmark portfolio or a standard of a comparison. It is to be seen that the risk of the benchmark and the assets included in the benchmark should commensurate with the investor's risk preference and investment needs. As I told you, portfolio में equity है, bonds हैं, commodities हैं, कुछ भी हैं, they should match with your needs, wants, risk appetite, and what exactly do you want from the portfolio. A well-defined policy statement also provides a deterrent against managers who do not tend to follow the investor's needs and preferences and risk tolerance levels. A portfolio manager should match all of these, like whatever objectives, constraints, risk appetite you have put in front of them. So he's responsible for following everything, and if he is not, you can question his stock picking ability basically, or you can just like question on his work and can be sued as well. Further, existence of a policy statements acts as a guide against any unethical practices adopted by the investment manager. So all these things must be known to you. Okay, so all these criteria are important before framing an investment policy, and we'll talk about more about the policy statement in the subsequent sessions. Okay, that's all for today.